Ladies and gentlemen, once we understand that Bitcoin is being held up right now from levels that stem back, in this case, in the screen here, a decade and a half, and in other cases, levels that stem back from 2017 and 2021, we understand that the position that Bitcoin is in is not just a position through which we can decipher in 101 basic TA. Oh, there's support here, there's resistance here. That's elementary level stuff, right? This is more nuanced, more complicated than that, right? And when we dive into the nuance, when we decipher it, when we decode what's going on here, we see very clearly that Bitcoin is in a critical macro position. We can't really afford to break down here. We have to break up. And if we zoom into the short-term charts, we try to get an idea of what will happen and when it will happen, we can see very clearly, and we can start to put this together over the last couple of days, that Bitcoin is in a structure right now that is enticing a move, potentially within the next few days or the next week on Bitcoin, right? A move either upwards out of this macro range, which we need to see, or a move back to the bottom of the macro range, in which case we'd be resembling price action that we saw at the top in 2021, right? That's not a good sign. So I'm macro bullish on Bitcoin. I believe we're in a macro bull market, and I believe that macro bull market is intact until proven definitively otherwise. The problem is it could take a long time to actually prove it otherwise, given the scale of the cycle. So we have to be very particular about what we watch here. We have to be very reactive to the market situation. The only way to be reactive is to understand what you need to react to. That's what I'm giving you in this video today. I'm giving you an analysis of the macro break up and break down levels, what they mean, what is behind them, and a short-term analysis as well. Like usual, guys, I'm leaving out the nonsense, all the stuff you don't really need to hear. I'm leaving it out. We'll keep it short and sharp today. Before we get into it, though, one thing I want you to check out is the exchanges. The Bitfinex exchange and the BitGet exchange. Bitfinex is global, non-KYC. You can sign up from anywhere in the world, and it takes literally 15 seconds with just an email address and a password to sign up. BitGet is KYC. You can sign up from anywhere in the world other than the USA. So pretty different use cases here. You don't need to link your identity to Bitfinex. You can sign up from anywhere in the world. BitGet, you need to link your identity. Can't use it from the USA, but it's a very popular exchange, top 5 trading volume, very high liquidity. Bitfinex is not too bad itself, right? I use them both personally for different reasons. And if you use my links down below to sign up to either of these exchanges, you can get a 15% trading fee discount with those links exclusively. Also, look at the screen right here on Bitfinex, access to 5,500 USDT in trading rewards just by signing up. So check that out if you're interested, guys. The links are down below. Helps me out a lot. It helps you out by getting on a good exchange as well. Let's get into the content here. Right, so we're going to start out by outlining what the macro support on Bitcoin is. The macro support level, the level of Bitcoin needs to hold in order to maintain macro bullish structure. Before we do this, I want to be very clear, okay? Technically speaking, we can break down from the level I'm about to mention. It would just be very, very bad indication, especially at this part of the cycle, but it can technically happen while maintaining the health of the bull market and the health of the cyclical structure. I just really don't want to see it happen, and it would be a significant setback. So that's one little nuance we can clear up. But now let's get into it. What is the macro support zone here? What is the level that Bitcoin pretty much needs to hold? Well, it doesn't stem horizontally, in my opinion. There's no specific horizontal price level. It's more of a dynamic level, okay? It's using things like this line right here, stemming all the way back from 2011, and you can see on every single interaction we've had with this line historically, pretty much on a weekly chart, but even on shorter time frames, if you draw it yourself and go and take a look, you see reactions, you see rejections, you see support retests. It's very clearly a major line. Are there fake outs? Yes, there are fake outs. Do we go below it? Yes, of course we do. It's not a specifically support or resistance level only. It's a support and a resistance level, historically speaking, dividing macro ranges time and time again. You can see over and over again significant retests. And guess what? The last significant retest we saw of this level was over here at January 13th at around 89,000, marking a potential bottom for this macro range. We just need to see the follow through now, but it's very clear that that is the macro support zone. Now, the important thing about this line is that, yes, right now it is major macro support. Yes, it did mark the last macro low, and hence it is our support zone currently. But if we drop below it, right, it's not really the end of the world, but it is a bad thing. For a reason. Well, we're losing a major support zone, number one. But number two is when we drop below this level, historically speaking, it takes us months to get back above it, and we simply don't have months to spare. The 4-year cycle is very particular about its date range trends, okay? The 4-year cycle says we'll top out in October this year. We don't really have months to spare in more of a correction, considering we've already been in a correction for months, okay? And on top of that, the Bitcoin dominance chart is part of the 4-year cycle. The Bitcoin dominance chart is scheduled, as per the 4-year cycle, to go down until Bitcoin tops. If we see Bitcoin correcting even further on a macro scale, Bitcoin dominance will go upwards to new highs, and that will disprove an element of the 4-year cycle. It's just not what we want to see. So that's one element of the macro support zone. Currently that level is sitting at around 90,000. The other element of the macro support zone right now that Bitcoin needs to hold, guess what, is also at about 90,000. It's about 91,000 right now. And that is this pink line right here, stemming backwards from the 2021 all-time highs. We discussed all these levels yesterday, but we're looking into it a bit more particularly today. You can see the 2021 all-time highs right there. That's a level we're holding for support currently as we speak. That level needs to hold as well. Now, as for the macro resistance level, I'm paying very close attention to this line, which I'll make orange, as you can see on the screen, going back from a 2017 all-time high, cutting right through the 2021 highs, just like the original line I discussed for support, and coming right through the price action right now. You can see marked on two separate tops in this price range. We are in price discovery here. There's no horizontal levels that we can analyze. There's only diagonal levels stemming back from price cycles, and that's what this orange level is right here. That is the level we need to break out in order to break this entire range itself and enter the next parabolic move on Bitcoin. So the macro support right now stems from this line right here in yellow and this line right here, stemming backwards from 2011, both of which saying around 90,000-ish is the support level we need to hold. And the resistance zone right now sits at around 109,000, and that is this orange line right here. Now, so we probably know that already. I discussed that yesterday. I didn't discuss it in that much depth, but I did bring up those lines. Here's the part that's a little bit interesting. Here's the part where short term comes into this and becomes very relevant. If we simply zoom in, so we've got the daily chart right here. We've got the orange line, which I discussed before, being the macro resistance. We've got the yellow line being the macro support. We zoom in to the daily chart and even further into the 4-hourly chart. We see a short-term level of support and a short-term structure become very, very relevant. A support structure stemming backwards from the 15th of January and very, very clearly acting as a considerable short-term structure. Okay, as you can see, retesting that over and over again, holding up this recent Bitcoin price rally for the last entire week. And in conjunction with the major macro resistance zone, we see some sort of wedge formation forming here. Now, this wedge is important not because of it's a wedge. It could be a triangle, it could be a channel. It doesn't really matter what it is. It's important because it is a structure alone, right? And the fact that we have a structure here means we have two scenarios. We have the scenario where we go upwards and break the structure and enter all-time highs. And we have the scenario in which we go downwards, okay, and break the structure to the downside, which we'll discuss more in a second. Now, the important part about this short-term structure is that it reaches an apex zone on the 3rd of February, meaning before the 3rd of February, we will be breaking this structure. We will be breaking it either up or down. Obviously, there's the only two ways we can go, but it will happen before the 3rd of February. So what does this tell us? It tells us that Bitcoin has an opportunity to break upwards and start the next parabolic macro move above its macro resistance level within the next 10 days. Within the next 10 days before the 3rd of February, we have an opportunity, actually 9 days, to really break upwards here on Bitcoin and actually start the next leg finally after so long consolidating. Now, that's the bullish scenario. That's probably the likely scenario, but there is another scenario here, unfortunately. And that is the scenario in which we swing back downwards on Bitcoin. Now, obviously, swinging downwards wouldn't be necessarily the end of the world because we'd still be above our macro support zone. But if we did go downwards again, and if we did go to a place in which we were retesting our macro support once more, take a look at the structure at that point. It would be something resembling a double top formation and something very closely resembling what we saw back here in 2021 at the bull market top, right? Very closely resembling that. As you can see, slightly slanted upward with a first top and a second top slightly higher, going back down, forming this kind of head and shot, this double top formation and then crashing to the downside. The resemblance there would be quite significant, and we really need to avoid that resemblance, okay? So let's go ahead and actually take a fractal from 2021 and just put it right on top of where we are right now, just so you can get an idea of how that resemblance could start to form and how this fractal could become a genuine danger on the Bitcoin charts. Now, it's not the same. It's not perfectly the same, but it's a little bit similar. Okay, you can see the similarities there. First peak, as you can see, with the first peak a little bit higher, second peak a little bit higher than that, and then crashing right downwards in this overarching kind of rounding top structure with this diagonal level of support, right? We really need to avoid that occurring, and the best way we can avoid that becoming an actual fear that we will be discussing on the channel daily, the best way we can avoid that situation where we're discussing that daily and we're actually scared about it, is simply just by breaking up right here on Bitcoin before the 3rd of February. So all eyes on this short-term structure and all eyes on the macro levels that matter right now. One of them being at around 90,000 and one of them being up here at around 109,000. These are the things that matter for Bitcoin as we speak. Tomorrow, we will be discussing the S&P 500, what it is doing in relation to the bull market support band and how that's impacting Bitcoin. We'll be discussing the Ethereum chart, which is in a similar consolidation structure, just like Bitcoin right now, reaching an apex in early February. Again, just like Bitcoin, we'll be discussing the total cryptocurrency market cap on strong support, the total 3 cryptocurrency market cap at strong resistance, and much, much more. So subscribe and stay tuned for that video tomorrow. I've got a lot to show you then. Guys, again, go ahead and check out the exchanges here. Bitronix, you can sign up from anywhere in the world. Takes 15 seconds, just an email address and a password. You get a 15% trading fee discount with my referral link. You get access to $5,500 in trading rewards with my referral link, and you get access to an exchange that has never been hacked before. Or you can check out, alternatively, BitGet for a very well-known exchange, albeit not available in the USA, and is actually KYC. But if you're okay with those two things, a very well-known exchange, very reputable, been around for a long time, that's another option for you. The link is down below. Guys, the last thing I'll mention is the VIP group on Telegram, where we trade altcoins 4 times a week. If you want access to altcoin trading signals and access to a group chat where we discuss the market 24/7 with other members, you can get that all on Telegram. Check it out. Thanks for watching, guys. Hope you enjoyed. I'll catch you soon.